Derrick here, senior trader over at T3 Trading Group, coming at you with today's pro trading tip. Today is going to be a pretty basic one. I'm going to be talking about support and resistance in your own trading. And again, it's a pretty basic topic and probably not going to be something that's too new for anybody. But what I really want people to pay attention to isn't just the idea of support and resistance. It's how I think about a technical analysis concept in regards to the market, whether it's something as simple as what we're going to talk about today, support and resistance, or whether it's a more complicated topic. The big focus for me is never about memorizing what something looks like. It's about understanding the supply and demand dynamics that actually make up what you're looking at. I really think that that is a big key to being profitable on certain chart patterns and certain types of trades, or not being profitable on them. I've been saying this for years. If trading was as easy as pattern recognition, just memorizing what things look like and then becoming a bajillionaire trader, you could train a 6-year-old to do it, right? Once you're old enough to have pattern recognition skills as a child, you in theory would go become a millionaire trader. We all know it doesn't work that way. So whenever you're thinking about any topic related to technical analysis, don't just memorize what things look like. Think about the supply and demand implications of it. So with that said, let's chat a little bit about one of the most basic concepts in technical analysis, which is support and resistance. So, what is resistance? When I ask that question to a room full of new traders, very typical answers I get are that's a ceiling for a price, that it is a line where the stock or the market can't get above. And while that is true to a degree, the answer that I'm really looking for when I ask somebody what is resistance in the marketplace is that resistance is a place in the market where there tends to be greater supply than there is demand. And therefore, the stock or the market will tend to get rejected back down from those prices when it actually gets up there. So again, we could be talking about a basic resistance level. Maybe right here, $50 is our resistance. And the stock or market, let's just call it a stock, works its way up towards $50. Well, if the stock is working its way up towards $50, how is it doing that? It's doing that with demand, more buyers than sellers. But when you get up to $50 in this case, when you get near that price, that is when demand weakens. The buyers in the marketplace, they view this $50 zone as a price where, maybe it's a little bit too expensive. I don't want to be as aggressive of a buyer. And it also is a spot where sellers tend to be clustered because they think it's a great spot to sell, to book some profit. So that term for those sellers that I like to use in a resistance area is called overhead supply. So the demand brings it up to that $50 area. That demand begins to lessen right as it runs into this zone where there is added overhead supply. And what happens is that stock tends to get rejected back down, right? Maybe over time it comes back up and again gets rejected back down. It comes back up, it gets rejected back down. It comes back up, and then maybe eventually it might even break that resistance. When a stock breaks a resistance, that we call that a breakout, okay? So the basic tenet here of technical analysis when it comes to support and resistance is that you would want to be short, a potential short seller beneath a resistance level. You want to take advantage of the fact that, going back in time, historically, this was a resistance zone, therefore you expect it to continue to be resistance in the future. If you want to be really technical about it, there's actually no such thing as support and resistance. There is only potential support and resistance. Because it was resistance in the past, it has the potential to be resistance again in the future. That's actually what you're betting on, if you will. So you would want to be a short seller, shorting in front of that resistance zone. If you were shorting, then your stop loss would be the breakout point. So in this case, $50 is the breakout. So if I was shorting in front of 50, then my buy stop would be right at $50 to take a loss if I'm wrong and a breakout is actually occurring. So in this case, maybe I shorted and I made some money on the way down. That's great. And I re-shorted. Maybe I made some money on the way down, and it happened again, but this time a little bit less. That's something worth noticing. It's interesting higher low here. And then maybe I tried to short again, and this time I lost a little bit of money. Okay. Another great principle that people should understand about resistance, and everything I'm talking about, by the way, applies an opposite to support. We'll talk about that briefly as well. But every single time a resistance level gets tested, there is a higher probability that a breakout will occur. Why? Well, again, the way we want to think about our concepts here is from a supply and demand perspective. So what do we know? Every time the stock approaches $50, there's demand that's bringing it up to it. But that overhead supply, that potential lack of demand at that price causes it to come down. But every time the stock gets near 50 bucks, some of that overhead supply gets taken out, right? Imagine a marketplace where there was only 15 individuals, and 5 of them are the buyers driving it up, and 10 of them are sellers who are saying, I just want to be sitting here on the offer because I think $50 is a great place to sell. Well, the first time it gets up there, maybe 2 of those sellers, they're able to sell, and they're out of the way. And the second time it gets up there, maybe 2 more sellers sell, they're out of the way. We only have 6 left. 2 more are gone. I've only got 4 left. 2 more are gone. I've only got 2 left. And in this last time getting up here, we take out those last 2. Now there's no sellers left, but those buyers, they were still there driving that price up, and now that the overhead supply is gone, we can continue higher with a breakout. And this breakout will oftentimes drive even more or new buying into the marketplace. Shorts are then getting squeezed. New buyers might enter the market because they recognize $50 as a resistance level and that resistance is gone. So generally, we will want to be short in front of resistance, but we actually want to consider being long above a resistance level, because now we know that that overhead supply is gone, it's been depleted away, and new buyers are potentially entering the market, and short sellers are getting squeezed. So that's a really interesting concept, right? Because in theory here, what I'm telling you is you would want to be a seller at a lower price and a buyer at a higher price. And that might run contrary to the way that you typically think about supply and demand out in the real world, right? In the real world, if something is more expensive, typically there's going to be less people that want to buy that item. And if something's a little bit cheaper, sometimes there's going to be more people that want to buy that item. But that's not how we always want to think about stock prices, because we got to think about aggregate supply and demand and these concepts of overhead supply. So that's a resistance level. Your support is going to be the exact opposite, right? So support, maybe our support was $25, and basically what support is an area where there tends to be greater demand than supply. People think $25 is a great discounted price for this stock, so there's a lot of buyers that are clustered there, and if sellers drive it down to that price, those buyers come in, the sellers become a little bit weaker, and that stock price gets driven back up. So you generally would want to be a buyer, you want to be long in front of support, and for the exact same reasons except for the opposite, you potentially would want to be short beneath a support level. Okay, so that is the basics of support and resistance. Support and resistance is not, a couple of the notes here. Support and resistance is not always a perfect price like this. Sometimes it is, and it's nice when it is because it actually makes it easier from a trading perspective, but it's very typical that you're going to be looking at zones. The resistance area is the space between $49.50 and $51. That's very typical. It's a whole area, and that can actually complicate your execution of the trade. A lot of times what I like to do when I'm looking at a zone like that is I pay attention to my other layers of probability. Is volume coming in as it's trading through that zone? Is there a clear, more round price like $50 where I can identify in the level 2 in the tape that there's a lot of offers that are clustered there, what we call that size, and that size is getting cleared out of the market. That could potentially be a signal for me to buy $50 even if the zone of resistance goes all the way up to 51. Another concept to think about when it comes to support and resistance is this idea that price has memory. So it's pretty typical that a previous resistance level, like 50 bucks, after the breakout occurs, when it comes back down in the future, it might hold that as support. So previous resistance oftentimes becomes future support, because again, people remember, oh, that $50 was really important. I wish I had bought that breakout. Oh, look, here's my opportunity to be able to buy $50 now that I should have done last time. Now at this discounted price as it comes back down. Okay, so just some basic stuff to think about with your own trading on how you can execute support and resistance in the marketplace. Oh, one other really important note, I should have mentioned this already, daily levels. I'm looking for daily support and resistance levels. I don't care too much, I'm not gonna say not at all, I don't care too much about that 5-minute resistance level, that 15-minute resistance level. That might still be important for some intraday execution, but my favorite breakout trades are gonna be formed by daily support and daily resistance levels, because those bigger time frame charts like daily charts are typically formed by more institutional money. And I wanna be trading on the side of the institutional money. All right, again, the big takeaway here from this lesson is maybe you learned how to trade support and resistance, but I really want people to be thinking about supply and demand in the marketplace when they're looking at their trading, whether it's something as simple as support and resistance or it's a more complicated topic. If you like what you learned today, you know what to do. Bang on the like button, bang on the subscribe button. Let's build this thing up. Check out the links in the description. Become part of my team of professional traders. I will see everybody out there in the market. Check out the ProDesk virtual trading floor that I'm running. There's some links in the description there where you can learn about how you can get involved. And there's also a link to my free ebook where you can learn about becoming a professional trader at T3 Trading Group like I am. See you everybody next time.